Hey everybody, this is William DiMaggio here with the Hood team at Coldwell Banker Realty. Hope you're doing well today. Today I am here with Mr. Brad Giles with Giles Insurance Agency, and wanted to talk with you guys. And I wanted to learn more for myself about how insurance works. We're going to talk a little bit about the current state of insurance with how real estate is going right now, and also let's talk about roofs in particular, and also kind of run through how insurance should be looked at and used, right?
Absolutely.
So thanks for joining us, and we'll kind of kick it away here. So thank you, Brad. Appreciate you
Happy to
being
be
here.
here. Yeah, appreciate you inviting me.
Absolutely.
So it's probably best to talk about history, kind of how we got to where we're at from the roof standpoint, and why companies are looking at roofs so hard.
Okay.
So historically, the older insurance policies were full replacement cost policies, no depreciation, but what they did not do is they didn't put any kind of age limit. So people being people, they just wait until, wait for the hailstorm to get a new roof.
Okay.
Well, that's really not what insurance is designed for, right? It's designed to try to put you back in a similar position that you were in before a claim occurred.
Okay.
Well, people would just wait and wait and wait. They would have 30, 40, 50-year-old roofs, wait for the storm to come through, get a brand new roof because the policy did not have any provisions to exclude that or to depreciate it. Okay.
Okay.
So that's kind of history. Well, it didn't take too terribly long for the companies to start figuring that out. Say, okay, well, we're going to put some age limits on it. We're going to start depreciating after a certain amount of time. We're going to put a higher deductible if it's wind or hail or some combination of these things. So kind of fast forward to, the last several years, you have all that in combination with they also can't get the rates that they need approved by South Carolina. This is not just a South Carolina thing. This is nationwide. Every
Okay.
state's a little different, but they have challenges getting the rates approved that they really need to stay profitable.
Okay.
So when that happens, well, they're either going to stop writing business, or what we've seen more often is really put a lot of restrictions.
Gotcha.
That restriction could be age of the home, much more likely the age of the roof. So you've probably seen with your clients, I'm having trouble getting coverage because my roof is 20 years old.
Yes.
So
Doesn't happen often, but it has happened.
it is, and I was telling you before we started, we're starting to see a little bit of that ease up as companies have been able to kind of catch up on their rate. It's still a challenge,
Sure.
and obviously with the weather patterns that we are having, whether you call it global warming, whatever you might happen to call it, doesn't matter what you believe in. The reality is we're having more storms more frequently, and they're more severe.
Gotcha.
When that happens, the cost of claims goes up.
Sure.
So when claims cost goes up, claim frequency goes up, rates go
Rates
up.
have to go up.
They have to go up. Insurance companies are for-profit companies.
Sure.
People kind of have this idea of, oh my God, they're making so much money. They're for-profit like any other company is.
Yeah.
So when they're paying out more in claims than they're bringing in premium, that's when you see the rates change.
Okay. Well,
So
that makes sense.
that's kind of where we're at on roofs. A lot of our carriers right now, if the roof is over 10 or 15 years old, it's a challenge. Now, coverage is available. It's just you can't get replacement cost coverage, so you're going to see a heavily depreciated claim.
I got you.
15, 20-year-old roof, yes, you can get a policy for that. It's just not going to replace the whole roof. It's going to be pretty heavily depreciated.
So if something happens, let's say a hailstorm comes through and it's a 20-year-old roof, so they've got coverage on it, but they won't necessarily get the whole roof replaced.
Correct.
Without having to come out of pocket.
That's right. So what most carriers have done, they have what they call a roof depreciation schedule built into the policies these days.
Okay.
So after, and every carrier is a little different, but let's say most common is after 15 years, they start doing a percentage depreciation per year.
Okay.
So year 16, it might only be 5% depreciation. So they would replace the entire roof minus your deductible minus 5%.
Gotcha.
But then as you get on up to 20, 25, 30-year-old roof, heavy depreciation.
Okay.
People, well, I've got a 30-year-old roof. That's what the roofers tell them, and that's what they're sold as. In South Carolina, with the heat that we have,
Doesn't work that way.
it doesn't work that way. A 30-year-old roof is just absolutely done at 20 years. That's just the reality of it. So, But once again, coverage is there. It's just a matter of understanding how it's going to be settled, and that's our job as agents, right?
Sure.
To explain that up front. People have short-term memories when it's 10 years later, and they've entered that depreciation situation, and they're not happy with how the claim is being settled because of the age of the roof.
Gotcha.
So that's a kind of a quick 101 on insurance
Okay.
and roofs right now, but it's always a challenge.
Well, that's interesting. I didn't know that's kind of how that was being worked. So, I've had some clients who had trouble with getting the coverage, I guess, that they wanted on the roof. So maybe that, more or less that's what they were encountering. Their agent was telling them, hey, we can't give you a replacement cost in your policy, but we can do this.
Right. So, we're independent agents, so I represent multiple carriers. It's pretty rare that I can't find somebody some coverage for a house.
Sure.
100-year-old home with a 50-year-old roof. I can probably find a policy. It's not going to be a great policy, not going to have full replacement cost coverage,
Sure.
but there's coverage available, right?
Gotcha.
So that's when people say I can't get coverage, that's very, very rare. There's some company out there for some price that
Sure.
will write coverage. Typically what they're talking about is I can't get a replacement cost policy.
Gotcha.
Now the good news is if you have an older home, if the roof has been replaced, then it kind of resets.
Okay.
So if I've got around here something built in the 80s, little ranch house, whatever, but it's got a brand new roof, well, that depreciation schedule, all we have to do is provide evidence to the carrier. Here's the invoice from the roofer showing it was replaced last year. That schedule resets.
Okay.
So we go back to a full replacement cost coverage on the roof then, and it kind of starts over.
Okay.
So that's the
That's
good
good to
news.
know,
The bad
yeah.
news is you got to pay for a new roof, right?
Absolutely. Somebody's got to pay for
Somebody
it.
does.
Okay. So as far as insurance goes, how is it supposed to be viewed versus how do most people look at it?
Yeah.
As far as a purpose.
It's a great question, and this is where I think there's a lot of misconceptions, not just on the consumer side, but honestly on realtors, mortgage brokers, and just
Sure.
the general public.
Yeah. It was not my field, so I'm.
That's right. Yeah, and it's I was the same way before I got into insurance, right? So, but understanding the true purpose of insurance overall, but especially on the homeowner side, is a lot of people want to view it as a maintenance plan or a home warranty.
Gotcha.
It's going to cover every single little thing that happens to my house. Now, it's a pretty broad policy. It will cover a lot of things, but you get into trouble when you try to start using it for all these little claims. When you hear people say, hey, I filed a couple of claims and they dropped me, that's typically what's happened is that particular person doesn't really understand you save it for the big ones.
Gotcha.
One thing we educate our clients about that, but we also encourage going with a higher deductible, and that kind of helps you. It prevents you from filing the low maintenance claims.
Yeah.
But there's cost savings with a higher deductible too. But what we really talk to people about is like you want to use it for the stuff that you cannot handle financially.
Okay.
Okay, so lightning strike covered absolutely. Now if it takes out a couple of TVs and a laptop and it's $700, $1,000, you've got a $500 deductible. Is it covered? Yes. Could you get $500 out of it? Yes. Is that what the policy is designed for? No, it's not. And people don't like to hear that.
Sure.
Well, what am I paying for? Well, you're paying when the lightning strikes and blows out your entire electrical system in the whole house, or it strikes and it sets fire and it burns your house down, and it's $250,000. That's what you're really paying for. So we have a lot of conversations with our clients.
Sure.
They call the claim, hey, is this covered? And majority of the time, yes, this is covered, but let's look at the dollars and cents because most carriers have some kind of discount if you don't file claims, right?
Yeah.
You've got a deductible involved. There may be surcharges for claims involved. So that's where your local agent comes in like, all right, let's tap the brakes for a second. Let's look and see, okay, is it covered? Yes, we know it's covered. On the other hand, does it make sense to file it? So then we can kind of say, well, what if we file this claim, what happens to our premium? I'm going to lose a discount and have a surcharge for the next 5 years, and it's going to cost me X amount, and claim amount is this. That's how you weigh it out. Now,
That makes sense.
it's always up to the client. I mean,
Sure.
if the client wants to get $500 out of a claim, knowing that their policy is going to go up, sure, that's their call. Our job is make sure they understand what's going to happen before they do that. So,
Sure.
I can't tell you how many conversations I've had of, I've been paying into this policy for 20 years and I've never taken anything out of it. Well, that's true, but it's not a savings account. We're not investing and eventually hoping or expecting to pull out. The reality is you hope you never use it, right? Because
Right.
if you file a claim, that means something bad has happened. But during that whole 20 years, at any point in time, that policy could have paid the full value. It could have paid $250,000 for the house, plus $100,000 for your personal property, plus it could have, at any point in time, it could have paid that maximum amount. So it's just kind of changing, your view on what insurance is supposed to be. Now, if you're one of those, hey, I want everything to be covered, a home warranty is available, right?
Right.
I know you guys handle some of that kind of stuff. So
Mm-hmm.
if it's one of those, hey, I really don't like the idea of I don't have a rainy day fund set aside. I can't afford the $1,000 or $1,500 repair bill for the lightning strike on my AC unit. Okay, well, get a home warranty. That can be used in conjunction with the insurance. Use the home warranty for the maintenance stuff. Use insurance for the big stuff. So
That makes sense.
yeah,
And I never really thought about it that way, so I appreciate you explaining that.
yeah, and most people don't. It's insurance is unfortunately. I'm not gonna make any bones about it. Insurance is one of those necessary evil expenses that we all have to pay.
It's one of those
And-
is you pay for it and you hope you never need it, but when you do need it, you're going to be glad that you got
Well,
it.
that's the thing. Is like if you've ever experienced a major claim, that could be bad car accident, house fire. If you've ever gone through one of those and seen, okay, yeah, over the past 10 years, I paid $10,000 in premium, but they just paid me $400,000 to rebuild my house. It's a pretty good return, right?
Yeah.
It really is. So it's just kind of changing your mindset a little bit of, all right, this is for the big stuff. I'm just going to set it aside. I'm not even going to worry about it. I'm going to think about it until the big one happens.
Sure.
So,
Okay.
yeah.
Oh, cool. Thank you for explaining that. And then, let's try to think. So how much coverage should people look for to have on their home?
Okay. Great question. And something we deal with probably daily, if not weekly for sure. And this is a big difference between me and you because you have values that you're looking at with your clients.
Right, the market value.
You're looking at market value, looking at comps, whatever. This is what the house is worth from a market value standpoint. What we look at is what's called replacement cost, meaning if it is destroyed tomorrow, what is it theoretically going to cost to hire a contractor to come and rebuild or replace your home? So we're looking at it at labor materials. It's just a different number.
Sure.
Sometimes they can be very similar. Sometimes they can be dramatically different. Just take a $250,000 home market value. All right. So that's market value. Let's say in Pillion. Well, if you take the exact same house and you pick it up, same size, same everything, and then you drop it into Shandon, Forest Acres, well, it didn't cost any more to rebuild there, right? The labor materials is the same,
Right.
but your market value is going to be dramatically different. So that's where sometimes there's a disconnect, and honestly can be a disconnect with realtors as well that don't understand. Well, they're buying it for $400. Well, I understand that, but it's only going to cost $250 to rebuild it. Now we got to meet somewhere in the middle to make the mortgage folks happy, right? So, and most carriers and most agents are going to do that, but the client doesn't necessarily need $400 on it. He might need $300 to make mortgage company happy and also not overinsure. Because that's what we don't want to do. And lots of people, why can't you just do $400,000? I can. I mean, that's how we make our money is based on writing policies, right?
Right.
But if I know they're not going to get $400,000 out of the policy, if it's destroyed, then we're selling them something they can't collect on. So just understanding there's a big difference between market value and replacement cost. your average house, most of the houses that we talk about with you guys about, most of them are going to be close. The market value and the replacement costs they're close enough.
Sure.
But you get into those rural areas
Mm-hmm.
where, hey, replacement costs could actually be noticeably more than a market value.
Sure.
You get way out in the country somewhere, the market value is nothing, but it's still a 2,500 square foot house, brick, whatever, that's going to cost so much to rebuild, right?
Right.
And the flip side of that is when you get Shannon, Forest Acres, some of these areas where the market value's through the roof because it's desirable,
Absolutely.
but it doesn't cost more to rebuild there. So that's kind of the constant conversation and battles we have. With it really comes down to the mortgage guys, right? I mean, that's the mortgage guys and gals, the ones that have to cover their loan. Those are the ones that we're usually kind of going back and forth with and trying to make happy. So, but yeah, we do see a lot of agents. Obviously, you guys have been doing it a long time, but particularly a lot of the newer agents that haven't grasped that concept yet. We're just two different song sheets. So
it makes sense. It makes sense. So awesome. Well, let's see. I know we kind of covered all the main topics we had talked about.
Yeah.
What about, do you deal with flood insurance?
We do. So flood, obviously with some of the recent events locally here last year, the Texas stuff that just occurred.
Yeah, I know that's on top of a lot of people's minds.
It
right now.
is. And, the unfortunate part is how many of those folks did not have flood coverage.
Mm-hmm.
You can argue, if you live near a body of water, you should have flood. Well, sure, and that sounds good, but if there's no history of flooding in that area, the North Carolina situation was so just bizarre. You're like, I live in the mountains. Why do I need a flood policy, right? So, but flood is any rising surface water. Okay, so people are like, if my roof blows off and rain comes out, that's flood policy. No, that's not flood. That's a hurricane or that's tornado or something like that. That's covered. It's the water rising up. It can be a creek. It can be a river. It can be storm drains that can't keep up. And the water just comes up into the house. Good news is almost anybody can get a flood policy. You don't have to be in a high risk flood zone to get one. So you're in the middle of nowhere, sandy, and there's no bodies of water around. You can still get a flood policy. Obviously, it's a whole lot cheaper because the risk is a lot lower.
Sure.
There's very few places where you can. There's some coastal stuff that is not eligible for flood, but most everybody else is very readily available. And if you're in a lower risk zone, it's pretty affordable.
Okay.
Can it get expensive in the higher risk zone? Sure. But like Lake Murray, everybody that lives on Lake Murray is technically in a flood zone. Depending on how far back you are, from the floodplain, the 363 mark and all that kind of stuff, depends on whether you have to have it.
Right.
Now, if I live on Lake Murray, am I going to carry it? I don't know. It's a man-made lake, got floodgates.
They control the water level so
it's
well.
Controlled, and depending on how high my house is compared to that, I may not carry it. That's me personally.
Sure.
But it's one of those, man, my house is right on the water.
Mm-hmm.
Okay, well, if we get crazy rains and the floodgates can't keep up, okay, different story. But a lot of insurance is just kind of what your risk tolerance is, what you want to self-insure, take care of yourself, or pay someone else to transfer that risk.
I got you.
So,
okay. All right, I got one for you.
Yep.
What about so hurricane insurance? Is that something separate from homeowners?
Okay.
So,
good question. So most policies, especially in the Midlands area, are going to cover anything wind related.
Okay.
So tornado, hurricane, just regular thunderstorms, wind, hail, that kind of stuff. Once you get coastal exposure, that's when we see companies saying, hey, we're not going to cover the wind or hail exposure if you're in this area or along the coast. So South Carolina has a state wind and hail pool that's available. So if you lie within that state wind and hail pool, you can get coverage through the state wind and hail. Okay. As you come back from the coast, the carriers will start adding that coverage back in. So let's say you're in Conway. Conway, you can probably get wind and hail coverage for no problem.
Okay.
Myrtle Beach, nope, you probably have to get a separate wind and hail policy.
Okay.
What we have seen, William, over the last several years, even inland, is more carriers, and this goes back to roof, more carriers going with a much higher deductible if it's wind or hail.
Okay.
So you may have a $1,000 deductible on everything as far as your base, deductible. It might be $2,500 deductible if it's wind or hail related.
Okay.
So that's another way that they're kind of hedging against the roof stuff primarily, because what primarily gets damaged when wind and hail? It's the roof, right?
Mm-hmm.
So, but other than coastal stuff, there's not separate coverages that you need to carry for that. All the carriers are going to include wind and hail of any sort once you get past the coast.
Okay.
One thing they don't, I don't know if you think about this or not, is earthquake. So earthquake is a separate one. And obviously with our activity we've had the last few years, especially Lugoff area and whatnot, we do get a lot of questions on that. Earth movement of any type is specifically excluded from almost every homeowner's policy.
Interesting.
Some carriers, not many anymore, some carriers will let you add it back as a rider. Most of them just say it's not covered, you have to get it separate. So there are standalone earthquake coverage policies, just like a flood policy. Once again, kind of depending on what area you're in, depending on what the risk is, that can be very reasonable, a few $100s up to, pretty expensive depending on, amount of coverage and where you're at. Those especially are going to be very high deductible policies. So that it's a catastrophic event. That's not the shimmy shake and my sheetrock cracked. It's not that kind of policy.
Gotcha.
It's my house came crumbling down kind of coverage. But something to think about, South Carolina is one of the more active states in the country, behind like California, as far as activity. The good thing is very minor activity historically,
Right.
We've had some history with some big ones in the past, but it's been a long time. So
Yeah. Well, I think there's a fault line that runs underneath Irmo.
there's actually several fault lines throughout the state.
Okay.
Yeah, I saw a map one time, and they kind of crisscross through the state. It was really a little shocking, honestly. Some of them are known fault lines, and some of them are, they call them assumed fault lines that like we're pretty sure kind of thing,
Gotcha.
But yeah, earthquake's that giant question mark, man. Nobody knows.
Yeah, absolutely. Yeah, you're exactly right.
No way to predict those things.
Well, I've lived here all my life, and I have maybe felt a minor one once.
Yeah.
And that was back in 6th grade. And I'm almost 40, so that was a while ago.
Yeah.
So
we had one probably 10 years ago that I heard and felt, and that was the first time I had ever felt one here. I did live in California when we had a pretty big one out there, so that was a little different.
But it is a different
A
experience.
little different out there, yes.
But it's okay. Still move here.
Still here. It's all good.
Cool. Well, I appreciate you joining me today.
I'm happy to be here.
Is there
Absolutely.
anything else you can think of that maybe potential homeowners or home sellers would need to know as far as insurance goes, or that we didn't cover?
And this really comes down to you guys more, is number one, independent agent is going to give you more options, right? Just because we have more carriers to shop with. But don't wait till the last minute. We're just seeing more and more carriers require more and more information before they will write a policy. They're asking for documentation, not just on the roof, but when was your HVAC replaced? How old is the plumbing? How old is the electrical? Particularly on your older homes, they're wanting to see updates. Well, sometimes you can't get it like that. You've got to go back and find that information. So, new construction, no problem. That's stuff we can handle same day if needed. Don't like to do that, but we can do it. But when you get the older home that needs to have been updated, just giving the agents time to do that, so that you guys
it's better to get started on that earlier in the buying process.
Yes.
Versus once you have a contract.
When you guys have a contract,
don't wait.
Go ahead and contact the agents then instead of waiting till that. Oh yeah, we close next week, and I gotta get a policy, and then everybody's up against the clock. So
okay, well, that's good to know. Thank you.
Absolutely.
All right, thank you for your time,
Man, it's my pleasure. Appreciate you having me.
Yes, sir. And thank you guys for watching. Once again, I'm William DiMaggio with the Hood team at Coldwell Banker Realty, and this is Brad Giles with Giles Insurance Agency. So you can give them a call for all your insurance needs.
Absolutely. GilesBrothers.com. Appreciate it.